Today, we'll be breaking down a little bit of the CPI news and, of course, take a look at Bitcoin and also maybe an angle from liquidity coming into the market and what that might look like. It's going to be a good one. My name is Paul Barron. Welcome back into Tech Path. Before I start, I want to thank our sponsor, and that is iTrust Capital. This is a good way to get your crypto into a crypto IRA. A couple of things you can do. If you already have an IRA, you can roll it in. If you don't have one, you can start. So always seek tax advice for your own position, but also check out iTrust Capital. You can hold Bitcoin over there, Ethereum, a handful of altcoins, even precious metals. So all you have to do is visit itrustcapital.com. Use our link down below. It's going to give you a $100 funding reward if you decide to go that direction. Today we're going to be bringing in a special guest, and she's been on our show before many times, and that, of course, is Lyn Alden. If you guys have never checked out her own website, go over to lynalden.com and her investment strategy. She does a great investing newsletter, and I would say probably one of the best macro analysts that we've had on our show. So let's welcome in Lyn Alden. How are you, Lyn?
I'm good. How are you?
I'm good. Nice to see you. So I want to kind of lead off with a few things today. Obviously, with the news on CPI and core CPI, a few things hit the market, and we kind of anticipated a little bit of this move. When you look at the current position right now on CPI in general, dropping below 3%. So that's a big achievement, I guess, by the Fed. And you look at this, does this really move the ball forward in terms of where the market starts to flow when it comes to digital assets, Bitcoin, and crypto?
So I consider this CPI report relatively unremarkable. Some aspects were in line, other ones were slightly out of consensus, but nothing particularly surprising. 3% is obviously psychologically notable, but
Sure.
there's no real significant difference between, say, 2.9 or 3.1 in the grand scheme of things. And I think that the kind of the bigger risk for CPI overall is, can they loosen policy while still keeping CPI down? And the driver on the other side of that is largely fiscal deficits. The fact that we're running much larger deficits as a percentage of GDP than we historically do, especially during an economic expansion, and a lot of that is now pretty structural. And so the question is, if they try to normalize rates back down to kind of a neutral rather than tight, and alleviate pressure from housing or alleviate pressure from small business loans, will that come with, say, an uptick in energy prices or other kind of drivers of inflation? So I view this less as, everyone's kind of like, can they get back to 2%?
Right.
My question instead is, can you stick the landing? Can you get down to 2%, and then can you stay there rather than having a whole nother cycle materialize in the years ahead?
Do you think there's a possibility for that with a lot of people's anticipation of a possible rate cut in September? You would see that the Fed would be kind of letting off the gas pedal a little bit. Does that get us in a position where what you're talking about is maybe a reversal on inflation in general? Or do you think there's been enough damage to the economy that this is all kind of a trailing indicator coming in from, price stability? What are your thoughts?
I think parts of the economy they're rather isolated from each other in this context, because we have a bigger than normal divergence between very loose fiscal policy and very tight monetary policy. And there are certain sectors that are more heavily affected by one or the other.
Hmm.
And so, if anything, as we get kind of a softening in some of the areas that have been doing well, that allows the Fed to ease a little bit, which takes the pressure off some of the ones that have been held down monetarily. I think one of the bigger factors to watch in the upcoming years will be the dollar index, especially the dollar relative to various kind of emerging market currencies, because one of the big kind of feedback loops or forcing functions here is that the world has a lot of dollar-denominated debt. And ironically, it's not owed to the U.S. mostly. It's owed to other entities, like, a country, its corporations or its government will owe dollars to China, for example.
Right.
There's all these interconnected, and so as the Fed potentially cuts interest rates, I don't think it's going to be particularly impactful for the United States domestic market. I don't think anything under a 1% rate cut would be particularly notable, given how much fixed rate debt is already locked in below those levels.
Hmm.
But any marginal cuts should be kind of decent for these emerging markets that have dollar-denominated debt, and it kind of eases their burdens a little bit around the margin. And so I think a relatively kind of useful cycle to be aware of is the 2002 to 2007 cycle. Basically, the U.S. came, we had the dot-com bubble, and then
Hmm.
we ran into basically a mild recession by most measures. It's more mild than recessions before it or after it. And instead, the next cycle was kind of led by global growth on the back
Right.
of that easing, which I think is, I don't think we'll get the exact playbook, but I think it's a playbook to be familiar with.
So with that being the case, liquidity is going to be a big part of this. Right now, Bitcoin, crypto, deeply correlated with global liquidity here. If the money printer starts up again, will crypto feel it? I mean, you were talking about this a little bit on X. When you see these charts, is this something that is in alignment with what your thesis is for what we could see growing out of this current position?
Yeah, so in addition to cross-border capital that has made that point a number of times, I've been in the camp that global liquidity is one of the biggest correlates with Bitcoin price.
Right.
And there's really kind of two components of global liquidity when measured like that. One is the rate of credit formation, and then the other one is the strength of the dollar, because the global liquidity is often measured in dollars because a lot of the liabilities internationally, as I previously mentioned, are denominated in dollars. And so that dollar component is pretty important. And so you can either get more rapid credit creation to improve global liquidity, or you can get a weaker dollar around the margins, and that can improve global liquidity because you're basically changing the denominator at that point. Um,
Yeah.
and so I do think that in the years ahead, we'll probably get another positive liquidity cycle. We've been in kind of a stagnation there for a period of time as central
Hmm.
banks try to tighten. I think we'll probably get another move upward, and I would expect, as a base case, for Bitcoin to do pretty well in that
Yeah.
environment.
Yeah. Looking at, I mean, we get a lot of comments on our show in reference to Bitcoin and store of value. You look at current store of value, many people would look at this, and some people would argue it in reference to other assets out there specifically tied to stable coins. If you look at the stable coin total market cap right now, and really what has been growing since about April of 22, the FTX era, obviously the dip there, but over really since last summer to where we are right now, stablecoins have somewhat returned in terms of opportunities there. Some of that, of course, has been the amount of yield that is being paid on stablecoin deposits, very similar to money markets. So with that being the case, how does this play for people who maybe are coming into crypto in general right now and considering I want to go with a little bit of my, my position into a store of value? Do I go Bitcoin? Do I go stablecoin? What is your position on this?
Yeah, so historically, Bitcoin and stablecoins have kind of been the two killer apps of crypto, right? They're the two things that have really caught on with traction through bull markets and bear markets alike. Bitcoin is an emerging store of value. Basically, it has superior monetary properties than most other monies we're familiar with. But because it's still small, it's still not widely held.
Hmm.
People try to build leverage on it. It goes through these cycles. It's volatile as it reaches its whatever its total addressable market is, or as it gets close to what it eventually will be. Stable coins are just dollars in digital form. It helps serve the need for dollars globally. The demand for them, and there's really so far there's two main use cases of stable coins. There's one that's basically the unit of account for trading and DeFi on various crypto platforms. A lot of that's going to be on Ethereum. And then the other big usage of stablecoin is basically demand for dollars in the global south. Much of
Right.
it's satisfied by Tron. So there's almost like two different worlds of the same asset. As a near-term temporary store of value, like working capital, that's where stable coins are very useful. Basically, the ability to tolerate volatility is somewhat of a privilege. Basically, the more financially comfortable you are, the more you can say, I'm willing to
Exactly.
hold something for the next 4 years. Whereas stable coins, you can kind of think of them as your checking account
Hmm.
if you're in one of those environments where dollars are useful.
You see, obviously, PayPal's entry into the stablecoin, PYUSD, comes onto the scene. Their issuance now, both on Solana and Ethereum. I mean, this is starting to become a serious, position. I mean, it's $500 million now that we're seeing within PYUSD. You look at this and you see the growth both on Ethereum and also on Solana. What do you make of these types of stablecoins coming to market? Do you think we're going to see a lot more of these? Or do you think it will centralize into whether it's Tether, USDC, PYUSD? or some of the European stablecoins? What do you think is going to be the future of that market?
So thus far, network effects have been shown to matter. Liquidity kind of begets more liquidity. And so far, Tether's network effect in this has been pretty remarkable,
Right.
probably stronger than I would have guessed. I've also been watching some of the yield generating stablecoins, or you can kind of think them as tokenized T-bills, things that try to pass on the yield to the holder rather than the yield being captured by the issuer. And even them, I mean, they've grown, but they're not exactly capturing market share very quickly.
Right.
And so network effects are clearly pretty strong among stablecoins. And I don't have a firm view on how many there'll be or how much those network effects will entrench because some of it is like a Boolean outcome of regulations, So
Hmm.
some of the onshore ones try to, turn the arm of the state against the offshore ones, and you kind of go back and forth there. So there's some outcomes that I wouldn't try to predict. I do think it's rational for these various entities to try to get into the stablecoin market, given how big and potentially
Right.
profitable it can be. But it's hard to judge the outcome.
Yeah, Tether obviously printing money over there in terms of profitability over the last couple of years. And of course, if you look at the regulatory front right now here in DC, USDC seems to be the favorite child. There is potential regulatory alignment coming out of DC here in the United States. If that were to come to pass and we actually get a stablecoin bill, does that change the landscape at all, or do you feel like Tether would continue its dominance from a global perspective?
So I think that given status quo, I think Tether's in a very strong position. I mean, a prime dealer now, for example, has been more supportive of Tether than the rivals onshore. And so, given like an absent of very strong efforts to change that, I think the status quo likely continues. I think that domestically, obviously, some stable coins could continue to gain market share, but globally, Tether is so far in the lead that it would take pretty heavy disruption for that to change. So my assumption is just current momentum continues.
Yeah, so a couple of things there in reference to Tether itself, too. One is with what's happening within MiCA. We see a lot of that in the sense of delisting out of some of the exchanges within the European Union. Then you look at if we do get a stablecoin passage, the potential is that USDC would be forced upon Tether as terms of a store of value. So I think you're right. In essence, yes, it will be interesting to see how this all comes about. The question is how quickly, because to your point, what's the adoption curve of this? With all of these things, if you think about MiCA, you look at potential regulation here in the US, you feel like this is an 18-month runway, a 24-month runway, or longer before we see businesses really starting to interact with stablecoins?
So I think that like the biggest use case here is international. In the U.S., we generally have fairly good payment systems. Where we run into issues is when we're conducting business across border, and that's where
Right.
stablecoins have been very useful. Some of it has been regulatory arbitrage that things could be easier in the banks as well, but they generally have this more red tape on things. Um, I don't try to judge timelines too much. And like I said, there are Boolean outcomes, legal outcomes, or lawmaker outcomes that I'm just not the expert in. But basically I just continue to be structurally bullish on the market cap of stablecoins. And for what we've seen so far, there are fairly strong liquidity network effects for the leaders.
I was looking at your tweet here. FedWire processed over $250 billion. I don't get to see that number very often.
Yeah.
A quadrillion worth of volume last year, average pace of about 6 transactions per second. When you look at this and you kind of compare this with what is happening within the stablecoin market, how does this become really a scenario, especially around FedWire fund services and stats?
Well, one, I just like to compare the size of settlement volumes because, like you pointed
Right.
out, it is a comically large number. America's GDP is measured in the tens of trillions,
Yeah.
but actually gross settlement volumes are literally over a quadrillion. Um, and the reason I find that chart kind of remarkable is it's basically the same number of transactions that Bitcoin can do. Basically, it's somewhere around the same number of transactions per second on average.
Hmm.
The
Hmm.
difference being it's not 24/7 and it's permissioned. And so basically, Bitcoin is kind of like a FedWire, but the global open source one so far are much smaller.
I
Um,
see.
and that's kind of why I made that comparison is that you can build things on top of it. FedWire handles a comically large amount of processing with a fairly small number of transactions because it's the bottom of a layered stack.
Well, obviously, that being the case with something like a government issued dollar, you look at Bitcoin still somewhat, well, very volatile. Do you think Bitcoin becomes less and less volatile as it starts to emerge as that in terms of a store of value, or do you feel like do the ETFs have a flow into this? What would cause that I guess that future for Bitcoin in terms of being able to get into that kind of scenario of especially around fund settlement?
I think of a long time. I think, we're 15 years in, and I think over the next 15 years that trend's going to
Okay.
continue of less volatility. Basically, in my view, mainly around it being widely held. If it's
Okay.
something's not widely held, one big player can leverage and blow up and move the market, or buy in and move the market. Whereas when you get 5x or 10x more just broad distribution of the asset, you have more.
Hmm.
There's historically been a cycle of distribution where during bull markets, kind of longer term whale holders will trim their holdings into that bull market and all that liquidity. And then during bear markets, it generally kind of rotates back to the stronger hands. But every cycle, Bitcoin gets a little bit more distributed, kind of like a startup company becoming a publicly traded company over
Right.
time, growing, get its holder base gets more diversified. And when we hit
Yeah.
a certain point, the volatility just, I think, will diminish over time, and the uncertainty around the asset will diminish over time.
Interesting. Okay, let's go on to a little bit what's happening in the AI space. Obviously, NVIDIA, a fast mover over the last year and a half. Meta starting to make some pretty big, significant moves. Many people have even credited Meta when you look at what they're doing in the AI space as being one of the leaders. They have their Meta Connect event happening in September. Are you anticipating any movement in this space in terms, or do you feel like this space is starting to see the top of where it's going to go in terms of AI adoption?
Oh, I think it's going to go way higher than it is now. I think one of the biggest challenges is to determine who makes money from this.
Yeah.
So far, a lot of companies, they're kind of questioning, well, are we actually making money from all of the GPUs we're buying? So obviously, the
Hmm.
GPU makers are making money, and the question is, how much money will be made on the other side of it? This could be one of those quiet revolutions where the biggest winners, other than the GPU makers, are the basically just various companies or individuals that have productivity increases from this. And so this is a long-term productivity improvement, because kind of like how automation, made blue collar labor way more efficient. Basically, one worker can do the work of
Right.
3 or 5 or 10 workers. We can see a similar thing in white collar work, which is that a smaller number of professionals with all these AI assistants can do more white collar stuff,
Mhm.
and that is a productivity booster for the global economy.
We got a chance to try the ChatGPT 4.0 voice, where it's basically like always on, almost like Siri or Alexa, and that in itself, I think we'll start to see an interesting adoption cycle. To your point, but when you look at the functionality of this, from a hardware standpoint and a use case, because most of it has been some of the big companies out there, you've got a growing ecosystem now kind of coming into this decentralized model. This was a tweet by Aether Ecosystem, along with others. I mean, we've talked about Render on our show before, which is more of a graphics decentralized compute system out there. And as we see more of this, this I think starts to open up not only hardware, but the expansion to your point, which is where a lot of small businesses, individual brands that could start building their own language models, LLMs. Do you think that has a future of where we'll see decentralized compute maybe come back?
I do. I think that's going to be probably a big factor. And so far, we've seen somewhat of an anti-economy of scale, along with an economy of scale, in the sense that obviously the leading models, the leading AI companies have tech that's ahead of their competitors, but then we also find that they're more heavily filtered and moderated to the point where some of their, either objectivity or their usefulness is impaired, despite
Hmm.
their technical advantage. Whereas some of the more open, more decentralized ones, their
Right.
tech might not be quite as leading edge, but then they make up for it with fewer or more reasonable filters.
Yeah.
And so that seems to be a trend that probably is going to continue.
Well, and I think we'll probably see a pretty big leap forward in terms of capability of those kinds of companies, including, that
Yeah.
front-facing UI that eventually will make it, whether it's you're into Perplexity or the variations of, loading that with the language model. I think that's going to be a good opportunity for growth in that area. So I know you're big on Nostr, and I was looking at some of the Nostr stats, and we always follow this because we talk a lot about the potential for decentralized social. And I was looking at daily active users. I would say moderate, but definitely has not been on a heavy growth path. I'm on Nostr. I find it difficult to use for me, but I think that might be the case. But if you look at what's happening out there within some of the Ethereum decentralized systems when it comes to social, whether it's Lyn's protocol, Farcaster, et cetera, a lot of growth here. You can see the variations here. Do you think we will see a decentralized social media platform rise in the next few years?
I think over time, yeah. And one kind of distinction between the Nostr space and the Ethereum space is the amount of capital put into it. So Nostr has had virtually, very little capital. There's been open
Right.
source development grants. There's one client that I'm aware of that raised VC capital and not much. A lot of these are kind of like homegrown hobbyist projects that then rely on open source funding from people that just like that to exist. Whereas if you're looking at, say, any given 3-year cycle, if your ecosystem can raise 10x or 20x more capital, it's going to have better growth statistics. I think the longer term question is what can be sustained here. We've seen, for
Right.
example, there are waves of NFT excitement that eventually kind of stagnate. There are waves of DeFi excitement that eventually stagnate. The question is, can these other ones sustain?
Yep.
Once kind of that capital, basically, can it become self-sustaining or not? The other thing about Nostr I find that's useful is that despite the fairly small size of the network, it already makes Bitcoin wallets better in the sense that it kind of adds Venmo-like capability to Bitcoin wallets. So, for example, if I wanted to send you Bitcoin before, I'd have to be like, okay, what's your Lightning address, or can you give me an
Right.
invoice, or give me an on-chain? Whereas if you're on Nostr, I can just look you up and pay you. And that kind of adds that. I think that element of social plus wallet is going to be a really big deal, and we'll see it show up in a couple different areas. But I think that's the overall trend, and we'll see what the winners are in the long
Well,
term.
it's going to be interesting because you're right. The sustainability of these are important. With you look at Farcaster, Lens, all those. The interoperability, of course, is kind of starting to show up. I think people are starting to realize the use case. You look at X also with Elon and his attempt to eventually become a money services platform, which I think is probably the longer play for X. But if you look at some of the historical platforms that have attempted this already, something like Mastodon would be a good example that has stuck around, but primarily they're closed nodes that create kind of communities around it. So I think the interesting thing to me is that there's a lot of new opportunities, and that's the cool part of all of this. And even Zuckerberg has kind of talked about this a little bit, is that he thinks maybe the future is decentralized. So it's going to be something to keep an eye on. So we've been watching the poly market, prediction markets. Do you follow this at all on what's happening with poly market?
Moderately, yes. Yeah.
Okay,
Moderately.
so this being a crypto-backed prediction market, we are starting to see some interesting data on this. I want to play a clip because this is a clip kind of defending what's happening in the crypto prediction market. And I wanted to get your take on it, but let me cut to this clip real quick.
So everything these days is becoming gamified, right? You can bet on anything in the whole world, any sort of outcome, whether, what color Gatorade is going to be poured on the winning team, all that stuff. As society as a whole, embraces risk taking.
Look, I'm not Elizabeth Warren, but I worry about the most powerful 0.0001% becoming more and more powerful, for sure.
What do you think more broadly about people betting, for example, on an election?
But in general, I'm in favor of putting money on the line to, cut down on the BS component potentially. And also, people are already betting on election outcomes anyway, in terms of how it affects equities and various futures and things like that. So, I want to have a direct instrument and not an indirect proxy.
But do you think there should be instruments for everything? Bet on what we're going to talk about on Squawk Box this morning?
There are instruments for everything.
There are, yeah.
No, but there are and there aren't, right? What is the one thing you'd like to be able to bet on that you can't directly?
I mean, like elections in the U.S., there are restrictions on like betting on elections, for example, but like people bet through proxies, and so there's nothing wrong with like betting on elections. If you can bet on a football game, like why not bet on the presidential election?
I feel like you don't like this whole betting thing.
No, I do. Sports, I understand. Politics, I also think. Well, let me ask one last piece.
Yeah.
Inside information. There can be a true information advantage over others.
That's fair, but that's also true in the equities
Stocks.
market.
Yeah, and anything. So what do you make of this? I mean, do you see this having any impact on these elections in the future and how accurate they truly are? I mean, right now we have Harris leading Trump. Whether or not this is accurate, and it's kind of showcasing what's going on in the market, especially around people that, this is kind of a serious, I would say a serious representation of society. How do you see this playing out in, a political landscape?
Well, so far the usefulness of these betting markets is that they update more quickly than polls. That's
Right.
historically what people look at, and polls have their own flaws. But when something big happens, like the debate or like an assassination, whatever the case may be, betting markets can react instantly, whereas polls you have to wait for like another rolling week or two for data to roll in. And at the betting markets, for example, after the terrible assassination attempt, Trump's odds were very strong. But then as the Democratic side kind of consolidated toward Harris, and then the vice presidential pick has so far had some decent oratory and narration at his rallies, and kind of there's like momentum building there. They were able to raise capital. We've seen the betting markets kind of shift toward Harris.
Exactly.
I'm not a political strategist, but so far there does seem to be signal in it. It does kind of match what's happening on the ground. And obviously if the markets are small and illiquid, then you can manipulate them. The larger and more liquid they are, the less manipulatable they are, or the more expensive it would be to manipulate them, which would then become not a good use of campaign funds, basically.
Exactly.
So I think it's mostly about size and liquidity.
Yeah. One last question to you, and I was following Eleanor Terra, this is Fox Business. She hits on a couple of points here that we have not had a position come out of the Harris camp on crypto. And many people would probably say that if she just mentioned anything on crypto right now, that it would probably pose, I think, a good potential representation of what the market might do. What is your opinion right now? Do you feel like this is not really a big issue? Bitcoin's going to win, crypto's going to win regardless? Or do you feel like the Harris camp needs to come out and take a position?
So I think that it's currently a bigger issue for broader crypto than Bitcoin, because a lot of this hinges on what is a security, what are the rules
Right.
around issuing securities, things like that. Whereas when it affects Bitcoin, it's largely either about mining or about privacy. Like is privacy allowed? Or are they gonna put resources in cracking down on various privacy techniques or not? That affects both Bitcoin and broader crypto. I personally wouldn't have super high expectations, for Harris regarding, digital assets in general. I think hopefully they'll be more constructive than they have been recently. One of the things during the Bitcoin conference, obviously there were a lot of headlines around Trump speaking and stuff.
Yeah.
But there also were Democratic politicians there, including Ro Khanna, and a number of them, co-signed a letter written to the DNC saying that our party, has to be better at that, right? So when you look at it from that perspective, that actually, the fact that they were there and kind of, getting interest there, I think was important, because if you kind of look at this as, two-party structure, if the majority of one party is happy with the industry, and then a minority of the other party is happy with the industry, then it minimizes the risk of really draconian opposition against the industry. It still might not be a great place for the industry depending on who wins, but by having some of that bipartisan interest, you kind of potentially cut off some of the biggest tail risks that can be done against the industry.
Lyn, it's always great chatting with you. Thank you so much for stopping in today. We appreciate it.
Thank you. Always happy to be
You
here.
bet. All right. You guys, of course, if you've not checked out Lyn Alden's newsletter, you can go over to her website, check it out. It's a free investing newsletter. I am in this list, and I like it. I like getting her insight on really what's going on. And if you haven't checked out her book, Broken Money, do that as well. It's a great read. All right, if you guys are not in the Diamond Circle, make sure and jump in right now. It's our own private membership group. And of course, we drop additional podcasts, more research over there, as well as some of my own insights. We have a small community over there. I shouldn't say a small community. There's about 30,000 over in there that just in the chat. So it itself is growing dramatically. But you can also follow me out there on X, @PaulBaron. We'll catch you next time right here on TechPath.